Hi guys, it's your boy Friday Trace. Welcome to my channel. I am Friday Trace. Today I'm actually going to be discussing about GBP I'm going to be analyzing GBP for you. After this GBP analysis, I'm going to be doing Bitcoin analysis for you. Recall that some time ago I told you what will be happening on GBP and also on Bitcoin. I am one of the best financial analysts in Africa. You can check it up. I have proven results and records to actually prove it. You you recall that my trading strategy has been very profitable for some of you that follow me, some of you that follow my analysis for some time now. I am going to be analyzing GBP for you. Don't forget to subscribe to my YouTube channel at Friday Trades. I also offer a mentorship program where I actually hold your hand one-on-one. In case you want to know what is happening in the financial markets, I'm going to be holding your hand and teaching you what is happening in the market, and for sure you got it. For sure you learn it. If you want to be free from financial stress, you want to acquire financial freedom, I am one of the best analysts who has a record, who knows what it takes to be in the market. Recall that the market, the financial world is one of those things that will make you stay away from inflation, stay away from lack, stay be able to navigate through all your burdens, all your expenses. Work doesn't actually pay now because of the huge backlog of expenses on people's neck. If you work, it's good, but then if you actually want a second source of income that will replace your main source of income, I think the financial market is one of the best market for you. In case you want to join my mentorship program, I'm going to be dropping my WhatsApp number below this video. Just go to the comment section, you see my WhatsApp number, chat me up, and I will actually take you in and you join my mentorship program. Just $1,000 in my mentorship program, where I hold your hand one-on-one and teach you what is happening in the market. So let's go into the chart. There are some arrays, we call them PD arrays, that is premium and discount arrays, that the market actually moves some. These arrays are the arrays that controls the financial market. Once you understand these things, there are things that I cannot actually open up and tell you, because this is a free program. It's just a free class on YouTube, just a free class. But I can hold your hand, teach you, give you an in-depth analysis on what is happening in the financial market, and you actually learn it. So let's go into the chart. Recall that this is how the market actually moves. So I'm going to be doing a top-down analysis for you. I start from daily. Okay, let's go to the daily time frame. This is 1 hour time frame. Let's go to the daily. From daily, I'll actually hit you up on the 4 hours. From 4 hours, I'll go down to 1 hour. From 1 hour, if we have the time, we'll actually go to 15 minutes, and from there we'll go to 5 minutes and 1 minute too. This is GBP. There are some arrays that the market actually moves on. Do you know why I actually mark up this? This is just a measuring gap. There are some things that are beyond the scope of this class I can't actually tell you. This is a measuring gap from here to here, from here to here. This is a measuring gap. That is why I had to put up these things. Is the market coming down to this place was just a retracement on the daily time frame. Then the markets, they have some traders here that they have actually trapped from there. They took it away from those traders with this green candle, as you can actually see it from there. So now we have this is just a push on the bigger time frame. You have this. Let me draw it. Can you actually permit me to remove some of these things? These are some markup on some of my previous class. You have this one, you have this as a push, as a retracement. Now this was previous liquidity, double top. The market has to retrace and offer liquidity here. Now they smart the liquidity away from those who put their stop loss here. Recall that there are only two things that the market makers does in the financial markets. It's either they offer liquidity or they're taking away, they are smashing people out of stop loss, they are taking people out of their stop loss. Now Where did they offer liquidity? They offer liquidity here. This is double top. So there are people who actually put up their trades here and say yes, that they are going down, that they are going down, they are going down. The market is going down. Fine, the market is going down. It was going down. They had their stop loss here. The market was actually going down. These people who put their stop loss here have actually turned to liquidity. That is the psychology. That is the psychology of what the market makers does. These two things are the only two things that the market makers actually do. So when the market was moving like this, now this has actually become liquidity. Now they are seeing huge money here. So their interest, the market maker will not actually go to your broker or into your private account to take your money. It is when you have a risk, when you place a risk in the market, you have a risk, put up a risk in the market, that the market maker actually take up your money. When they hit your stop loss, the money that have actually converted it. So when they came, you have this liquidity, you have stop loss here. Your stop loss is your liquidity. Just understand me from that perspective. Now when the market maker came down, they offered you liquidity. They had to come down. It's a make believe system. They make you to believe that this is what that they don't want to do this, or this is what they want to do. But in the recent, they have a philosophy. They have a way of doing it. It's just for you to be able to understand the footprint of the market makers, and that is what I'm actually going to teach you if you join my mentorship program. I'm going to be dropping my WhatsApp number below this video. There are some things that I have an in-depth knowledge of the financial market, that I have a track record, I have a proven record of what is happening in the market. I can always prove it for you at a long time. I have a long database, I have a light database of information that I actually have with me. I can share it to you if you want to be part of my mentorship program. I'm going to be dropping a WhatsApp number below this video. Just hit me up on WhatsApp and I'll hold your hand, teach you what it takes to be in the financial markets. Now you have this liquidity. The market makers, they actually came to this place. When they came to this place, why I actually marked up this particular thing is that this is just a retracement. It's a pullback. It's a break and retest system. On this day, those break and retest traders, those retest traders will tell you that it's a break and retest, that they break and retest. Fine, they benefit on these days when the market retested from this place. On the bigger perspective, as a market, somebody who understands the footprint of the market makers, this is just an inversion fair value gap. This was a breakaway gap coming from here when the market was actually moving down. This was a breakaway gap. So whenever the market breaks up breaks out of a breakaway gap and actually return to test it again, it becomes an inversion fair value gap. These are high wired secrets in the market that you only know it from financial experts like us who have years of experience in the financial market, who understands how the financial market is booked, and one is willing to teach you. You are lucky to have me, to have my hand, to have me hold your hand and teach you what is happening in the market. You'll be free from financial stress and all that if you understand me. Now when the market returns to this particular place, the market had to push up. This is a 1 and 2 push system. When the market pushed up, there are also some people who actually put their stop loss here, who follow this market up. The market makers are interested in coming down to take up their stop loss. Now when they came, where did they came? They came down to this fair value gap here. There is a fair value gap here that they actually return to. When they return to this fair value gap, if you take this market from the bigger perspective, this will actually become an OB. That is an order block. These are advanced techniques that one will actually want to know. Push, return to this place. This has actually become an order block. Then you have something like this. You have a mitigation block here. It becomes a mitigation block. It becomes half of the whole movement. This from here to here, you have something like this. Briefly. Let me hold this. So from here to here, then the same psychology, same thing that happens. If you have this as an order block, this becomes a measuring gap. From here to here becomes a measuring gap. If you actually want to know where the market will be going, once you take up, let me bring up a rectangle and measure it. I have a local system of measuring some of these things, and they actually work. These systems work. These are results of years of backtests and all that. So if you measure from here, take this rectangle directly, measure your take profit now will become from here to here, when you measure from here to here, from where the market returns, this is where GBP USD will be going. There is nothing that will make GBP USD not to go to this point, because it is as a result of my years of backtest and all that. So you you it takes a certain level of understanding, a certain level of skill that one will actually acquire in order to reach this level of precision. This is where GBP USD will be going for the moment. When GBP USD hits this level, it will retrace. Then this becomes a measuring gap. If you measure from here to here, take it down, measure up. This is what it gives you. This is where it is going. When you look back, let's have a look back system. It will fall to a fair value gap or offer a liquidity from the other side. Let's say it's offer double top. This is double top. You see that these things they have precision, they have certain level of measurement. These are algorithmic terms. These are signatories that one will actually have to understand. When you understand these footprints, it makes you a financial expert. This, when the market hits this particular place, it becomes a double top system. You have this. When the market hits here, you have this as a double top. This becomes liquidity. Where will the market go then? When the market comes, it will return to you always see an inversion fair value gap here again. When the market hits here, you see something like this. If it hits here, you begin to see something like this. When the market goes up and hits here, when it hits here, you see something like this. It becomes a break and retest system. So you have this as a measuring gap. The market will actually retrace, or when you understand that the algorithm has actually switched itself, is when the algorithm begins to take up the inversion fair value gap, the measuring gap. Whenever the market comes and break here, this region. Hold on. When the market comes and break this region, once it break this region and offer liquidity here, it will have to retest it. Once it retest it again, you begin to have this. Then this becomes a double bottom system. When it becomes a double bottom system, it's a balanced pressure range. That is what we call it in the financial market. Then you have something like this. There are two probabilities. If you have this, fine, it will go. But if it breaks and begin to break and reclaim this and hold this, then you know that it's downward. Recall that the way the financial market is booked is that you don't actually go into the market blindly. If you go into the market blindly, you will not succeed in the markets, and you come out and say that the forex market is a scam. It's a scam because you have not actually given it your time to study it and know what is happening in the market. Once you understand what, there is nothing like scam here. The only thing is that you are blind. You are just like a sheep that is blindfolded. When you blindfold the sheep and you want to take it to the slaughter room, the sheep will not actually understand that where it is being taken to. The sheep is blind. It has a cloth tied to its face. So how would the sheep know where it is going to? You do not know. It will only realize the situation when it has been slaughtered by the slaughterman. The financial market is a slaughterman. You are the sheep. You are being taken to where you be cannibalized. They will take away your money, and in the end, you cry like a baby, and you say the financial market is a scam. It is not a scam. It's just that the problem is yourself. You have actually failed to do what you're supposed to do. You have failed to arm yourself with the right information when you are going to war. When you are going to war, what do? You arm yourself with the right weapons and the requisites, the skills you actually need to succeed in that war. If you don't arm yourself with such skills and weapons, you will not succeed. So the financial market is also like that. This is a war zone. It's a war zone essentially. If you don't know that it's a war zone, then you need to ask experts what they actually pass through. Somebody like me, I suffered for years. I know how much I lose in the financial market because before I started succeeding in the market, I know what it took me. To succeed. But then the point is that I had no option. I had no alternative to this business because I was actually going to YouTube. I was actually going to certain resource material, watching people live their life. I was seeing the kind of lifestyle that traders live. Do you understand the freedom that you have when you only press your phone and you're making money? So I actually saw myself in that line, in that spotlight. I was like, God, when will it be possible for me to attain this kind of freedom, financial freedom, where I'll hold my phone and I'm making money. So it was just a challenge to me. I never saw anything beyond that. I was just like, shit, this is what I want to do. So how do I go about it? And I started working on it. The worst is that in this business you are alone. It's a very lonely part. The financial market is a very lonely part. It is very lonely in the sense that when you lose market in the forex market, there is nobody you are going to explain. There is nobody you walk onto and say, bro, this is, if you don't have a mentor, that is why everybody needs a mentor. There's nobody you actually walk to if you don't have somebody who give you the right skills, who hold your hand. And I'm willing to hold your hand to teach you what it takes to be in the financial market. I'm going to be dropping my WhatsApp number below this video. Just join my mentorship program and I'll teach you what it takes to be in the financial market. So like I was saying earlier, I was saying that the financial market is a lonely part. You need to be in charge. If you're not in charge, you lose money. It's a liquid market, a market that has about 3 point something trillion dollar capitalization. You see that I mean on one pair like Gbpusd, you see that has a huge money in it. These are multinationals. These are multinationals transacting. These are footprints. These are institutions, hedge funds, investment banks like West Fargo and all that, Bank of England, Bank of America, transacting, doing certain level of transaction. So there is a high level of liquidity and a high inflow of money going into it. So you actually need to know, once you understand what is happening here, the little money you make from here, the little money, those ones you succeed in making, you will be free, because that small money to them is huge money to you as an individual. And knowing where we actually come from, we are Africans. Me, I'm from Nigeria. I'm a Nigerian. I am proud of where I come from. Where I actually come from doesn't actually count. It's the quantity of information that I'm actually able to give to you. The knowledge I have that actually counts. It's not where I come from that counts. It's the knowledge I offer you. The scale of information I offer you that actually matters to you. Where I come from don't count. I don't give a shit about that. I just do my thing. I just come every day, come to the chat, analyze it, tell you what's happened, what is going to be happening in the financial market, and I go my way. If you are interested in where I'm coming from, that's your own business. I don't give a fuck about that. I just do my thing and go my way. Excuse me, let me sip some water. So like I was actually saying, this is the daily chart. This is the daily chart. Let's go into that. I've told you, I've outlined the bigger picture. I've outlined the bigger picture of the market to you. Let's go into a 4 hours time frame. Let's go into the 4 hours time frame. Record them, record them, record them, record them. I'm going to be very brief with this class. I've actually spent like 18 minutes already, so I'll be very fast with it. I have a Bitcoin to analyze for you today. I'm going to be analyzing Bitcoin for you today. For those who are interested in what is happening in the Bitcoin in the crypto market, you actually use it to trade any other currency that you want to trade, even if it is not Bitcoin. Anyone you want to trade, you can use it. I use my analysis to trade it. Now, what do you have in this particular place? You have an inversion fair value gap here. This is an inversion fair value gap. You see that the market has actually hit it. When you have this is an inversion fair value gap. I've outlined it earlier on. This is an inversion fair value gap. If you take this particular thing, this rejection block, and divide it into two, it will give you this white line. When you hit this white line, what do you have? You have a change of character. We call it cough. The change of character, when the algorithm that actually runs the market begin to change, when it begins to change itself and change itself, that is, it's a cycle all through. There is a fair value gap here. There is an inversion fair value gap that actually exists here. This fair value gap, the market has actually hit it and is retracing. This particular range, you see this particular range that I marked here. This particular range that I marked here, I've marked some of these things earlier on before now, because I understand how the market is booked, and you see that it is respecting it with precision. That is what every one of us actually need to succeed in this market. Let me mute this. Let me mute this. How do I mute it? How do I mute it? How do I mute it? Let me read this. Okay. Okay. This is it. Earlier on, I had these markups on it. This markup just identifying the situation of the market. You have, this was a previous high and this was a previous low. So recall that curve is a change of character. Whenever you have a higher high and a higher low, whenever the market is producing higher highs, what it shows that the market is an uptrend. It's in an uptrend. Higher highs and higher lows is in an uptrend. Whenever you are having a lower lows and lower highs, it means the market is in a downtrend. So if you are having lower lows, this is a low, this is a low, this is a high, this was a high, this was low, this was high. You see that this particular high is lower, is higher than this, but this particular high is lower than this one. So it's showing you that the market is in a downtrend. You had this as low, this low is lower than this low, this low is lower than this low. It shows that the market is in a downtrend, and immediately you see that if you are able to count the number of candles from this perspective, from here down, if you are beginning to count this candle from here, you see that you have multiples of candles, but you saw that this market actually broke this particular structure with only few candles. You see that the number of candles from here to here, you see that the number of candles this side, this candle this side are more, the numbers are higher than this particular side. It shows you that, one, it shows you momentum in the market, shows you that you have more buying pressure coming into the market from this side. Meanwhile, the bigger picture shows you what you have: a double bottom here. This is a double bottom. This is a level 2 trade. This is an inversion. This is a measuring gap. This particular thing is a measuring gap. It shows you that you have a measuring gap here. So it is at level 2 of the market. If you switch, sorry, if you switch the market up from here, you have 1 to 2 leg level. This is it. You have one, you have a retrace, you have second level of the market, that is level 2 of the market. So the market has actually returned to hit this. This is a measuring gap. The market has returned to hit the measuring gap. Where is it going again? You have 1 2 3 level, because the market, the algorithm, that they are not going to waste time here. They are going to smash the market away from anybody who is in the market already. They don't have much time to waste again. Now, if they are moving, there are footprints that actually makes you understand that the market is now in a bearish or a bullish trend. That is the trend of the market. You see a breakaway gap. This is a breakaway gap here. It's a breakaway gap because the market has actually taken away here and it is not willing to return to this place. This is a breakaway gap. This particular place, it's a breakaway gap. Now, once you have a breakaway gap and you have a change of structure, this is a change. This was a high. The market took up with few candles and took away. The market is not returning down to this particular place again. This will become a breakaway gap. It is not returning again. The trend is still up. Now, it is whenever the market returns to this particular place and breaks below it and come back to hold, then you know that the trend is to the downward. But if it actually returns to this particular place and holds, this is a measuring gap. Recall I told you it's a measuring gap on the bigger time frame. On the bigger time frame, this was a measuring gap down here, and this is a breakaway gap. So after the breakaway gap, the principle is that after any breakaway gap, you have a consolidation. This is the market consolidating. This is the market consolidating. The whole of this thing becomes a consolidation. After the consolidation, you hit up to offer liquidity. You have one, you have one. This becomes double top, double top. So when you have a double top, the market will have to come back again. When it comes back, it is coming back to hit this inversion fair value gap. This becomes an inversion fair value gap. It is coming back to click on it. Once you click on it, it becomes what? This particular side, it becomes this and this, and then you have something like this. You have a measuring gap. This becomes a measuring gap. So when it becomes a measuring gap, see how your movement up. So that is why we are expecting the market to move up. So guys, these are the areas, these are the things that you actually need to know in the market. There are some things that I'm saying in this chart that I can't actually explain to you because they are beyond the scope of this class. This is just a free YouTube class that I do online. If you want me to hold your hand and teach you what is happening in the market. I can hold your hand, educate you, tell you the secret of the financial market, how it is booked. Recall that I am Fridays Trades. You subscribe on my YouTube channel at Fridays Trades. Just hit the subscription button and put up the notification button so that whenever I drop a new video, you will be notified and you'll be one of those people who will watch my video and then have a first-hand information about what I am willing to share to you. So let's go to the 1 hour time frame. Let's go to, I have poor network. My network is not strong going by where I come from. I told you I'm from Nigeria, I'm from Africa. I don't hide my identity, I don't hide where I come from. It is the quality of information that I'm willing to actually give to you that counts to you. It's not where I come from that matters. These are footprints that actually show themselves. Like I've actually drawn this. You can screen record, you can screenshot it, or even screen record my markets. You see that the market will actually return. It will follow this setup, these things that I've actually marked for you. I don't have two ways about this. I do this for a living. It is part of me. I have serious passion for this. I have almost 99% dedication to this because I knew that with this thing I could have all I wanted in life. I could live the kind of I go to many countries. I've traveled to many countries all over the world. I have students all over the world. I have students in more than 15 countries. I have students in US. I have students in UK. I have students in Germany. I have students in Canada. I have students in so many parts of Africa. So I have students in South Africa. Some of them will actually come to connect this video because they always learn from me and they love what I do. So guys, I think this video is getting too long. I will be very brief about it. I'm going to be very brief about it this time. You have actually seen that it is the same thing happening. It is the same thing. Just follow my markups. These are the same things happening. It doesn't change. This thing doesn't talk. The algorithm that actually controls the macros and the macros that controls this market, they don't talk. So as far as they don't talk, these are code. These are high wired computer codes. Recall that I also have a store on mql5.com. I'm going to be dropping the link to my store here on mql5.com in case you want to rent any my algorithms, you want to rent any robots that actually trades. I have robots. I have more than 16 robots in the financial market that trades. I have a robot that trades Gbpusd. I have a robot that trades Bitcoin. We call it Bitcoin. I call it Bitcoin well. I have a robot that trades gold. I call that robot gold scalper. I have a robot that trades GBP. Call that robot GBP what I've forgotten. But you can check my store. I'm going to be dropping the link to my store below this video in the comment section when you click on it. In case you don't want to trade manually, you can rent my EA. Just rent my EA and it will trade for you. It is built based on my strategy that is very profitable with good risk management mechanism that actually built this robots on. It's as a result I built this robot from years of backtest. I'll backtest my strategy. I go through the strategy and I see that it is actually working. So after backtesting it, I come up with a computer code, a high wired computer code, and with high level of backtesting results on it. You can check my wall on mql5.com. I'm going to be dropping the link to that store below here. So let's go to 15 minutes. I think after the 15 minutes we'll be rounding up this class. Like I told you earlier, I told you that this market is in a consolidation phase. This is an inversion fair value gap here. So the market has actually shown you where it is going. See that you have liquidity up here. It has gone to manipulate it. It is down already. So whenever it comes to this particular place, this is just a measuring gap from here. This is just a measuring gap from here. It has shown you a measuring gap. This is a measuring gap from here. So it has shown you that the distance from here down to here, you take it, you bring it down, it will come down to this particular place. to come down. Once it comes down from here, you have this distance. This is it. This is, sorry, this is a measuring gap. This is the measuring gap. So the market is telling you that from here up to here, if you take the distance and drop it, it will give you this. It will come into this particular place. That is precision. So whenever it comes into this particular place, you begin to see higher highs, because as the market is coming up, you have this something here. The market will come and break here. So when it breaks and come back again and it fails to break this particular region, then this becomes this was high, this was low, so you have another high. So this high will be higher than this high. Then you had low here, so you had another low here. So this particular low will be higher than this particular low. So whenever you have, record that I've told you earlier that whenever you have higher highs and higher lows, what does it entail? It entails the market is in an uptrend. So the trend will reverse at this particular stage. Then you begin to have this. You have this as liquidity down on top. Have this as a failed liquidity. To return to this place, you have the head and shoulder pattern. Then the market will begin to move. As it is moving, it has reversed. That is the psychology of what we actually do here. So guys, don't forget to subscribe to my YouTube channel at Gbpusd Analysis. I offer a mentorship program, just $1,000, and you'll be inside my mentorship program, where I'll hold your hand and teach you what is happening in the financial markets. I'm also going to be offering a free signal where you deposit your money into a broker. When you deposit your money into a broker, I trade for you and make money for you, and you use the money to live the kind of life you are capable to live. Of you, I want you to be free from financial stress, and that is why I'm doing some of these things I'm doing. I want you to be free. You have to be free. You have to be free. Together we build a better world where all of us will be happy to live in this world together. Peace out.